So in our earlier videos, I was able to discuss what Fibonacci retracement tool is and how to use it. Then the latest video I uploaded was about understanding higher high, higher lows, lower highs, and lower lows. So with those two videos, I feel I can proceed to live examples of how to use the Fibonacci trading tool, and just run a couple of examples on some. I'll be using Euro USD and Euro CAD for my analysis. But like I said, you can use the analysis on any pair. You can use it on any time frame. So I deal with currency, so I don't know so much about indices and all, but you should be able to use it since the analogy is almost the same thing for everything. So first of all, fundamentally, you don't trade against the market. Very important. So when the market is trending down, you want to look for entry points at places for the price to go down. Okay. For example, this is one in front of me, and this market is currently trending down. So if I want to use the Fib retracement tool here, I would not want to trade against the market to go up because you don't know when the retracement is going to end. Okay, so it's better to just lie in wait and look for the perfect opportunity to enter the market. So for something like this, I would want to enter the market down, not up. Please take note of that so you don't fall into the trap. And for this type of market that is currently trending up, I would want to look for to draw my Fibs up so it can hit my retrace my key zones and I can buy. So first of all, the first thing you need to do is know what direction the market is trending to. Without your moving average here, you can know that okay, this market is obviously trending up. Okay, the market is trending up. Depending on the number of pips you want to take, if I want, okay, this is where it gets a bit technical. If I want, I can draw my Fibonacci from here. Okay, this was a previous market. Okay, let me. So this was a lower low, lower low, and lower high. This was the last place. All right. So immediately price was able to move above this place. You know that the market trend has changed and market has assumed a different position. So if I want, I can run my Fibs from this place. I can run it to this place if I want to, or I can just run it from here. I can run it to this place. I can run it to this place. I can run it to different places if I want to. So you must, first of all, you should be able to pinpoint what the market is doing at that particular time. But if you are not a position trader, you don't need to go that far. You can just pick something light from the market. So let's use this point as our analogy. So this was the lowest point. Okay, so market was trending up at this point, and this was a higher low, and then it went up. This was a higher low, higher low, higher low up to this point. So until price was able to break through this point, we could not say that price was or the trend was changing. But when price was able to break through, we understood that trend changed to this point, and from an uptrend, it became a downtrend. Okay, follow me with the example. So if I want to bring out my Fibonacci from this place, I can plot it at this point. Okay, and I can draw my Fibs level to this point, this initial point. Okay, so it didn't quite touch my 61 point here, so there's nothing to be worried about so much. I can bring it down here. Let's assume price was here. Okay, so this was the continual leg here, but it didn't quite touch it too. So even if you want to leave it at this point, uh, so there's no obvious entry here unless you want to. Like I said, you can use this for quick scalping. You can use the 38 and 23 for quick scalping. So your price already got here, so you would want to trade this down, trade this down, trade it down, whichever way you want to go. So I can bring this down up until this point. So price hits my 61 point at this place. Okay, price hit my 61 point at this place. So this was a perfect place to enter the market. Now, if I had entered the market here, if I entered the market at this point, I would have, so I would enter here, take my first profit, take my second profit, take my third profit if I wanted to. Now it was able to break down up onto this place, so I can just replot my fibs at this level. Now this is a better entry for me than here, okay? Because if we are not to take account this candle since it turned bullish, if we put it at this point, so it didn't quite touch my 61 and it didn't even go near my 70. So if I'm entering at this point, I'm entering because this is the zone, okay, and I'm getting big bullish candles here, so I can enter. But it didn't quite touch it on like this one, so there was a definite touch on my 61 range. There was one touch, two touches, three and four touches on that same line. So I knew that okay, I could enter this trade like this. But in case you don't want to go that long, in case you are like, I don't need to go that long, at this point, market started trending up. Okay, so it's more like knowing what is best for you. So you can say there was a small uptrend here, and uh, if you want, you can bring out your Fibs tool from this place and just straight this leg down here. Okay, so you could enter the market at this point and you will take your profit and ride along with the market. Another example, if you want, let's say you just want small profit out of the market, you could just do something like this. Let me make this big. Say you want just something like this to this place. Okay, so if you had entered here, you would still be right. You would take your small profit here. Say you want to extend it up until this point. So this was a perfect 70 entry. So either 70 or 61, you can enter half of your position on the 61 while you wait for the 70 to play its magic. Moving further, you can decide to enter your market here if you want. Remember, it depends on the type of trader you are, but these areas are too small to enter the market. I recommend you come to an area like this that is still bigger. Okay, so if you enter the market at this point, you would get this nice touch here and trade the market down. Now, like I said, you can use Fibonacci on different time frames. If you come to 15 minutes now, so you just try to reproduce the same thing on the 15 minutes time frame. So, for example, so this was a leg that seemed like it broke through market structure. There was a market structure here. So if I wanted to enter, I would enter around this place, and then I would trade this down up onto this point. Now, initially when price got here, there was a slight rejection, but it was not much. So this trade is not really worth entering. If you had entered, you wouldn't have gotten so much from it. So let's look at another example and see how we could use the Fibonacci. Let's look at the 1 hour time frame. Okay. So imagine we draw a fib from this place. This is the lowest point, the initial low point. Okay. Say we run our fib from this place down. Alright, so we have a nice 70 bounce here, and we could have traded this 70. We could have taken how many pips? This was on the 87. Okay, so we would have taken about 67. That's about 20 pips. We would have taken 20 pips right here, and we would be fine. But like I said, depending on the type of trader you are, you might feel you want to take small profit. Although you should not trade against the market, but probably you just want to take small profit. You could run your fibs up at this angle, and then this was another 70 pounds. Let me zoom in so that you see it clearer. So this was a 70 bounce. Now, if you had entered at this 61, I prefer to use buy stop and sell stop for Fibonacci because you don't know when it's going to break. So instead of using my buy limit at this place, I would let it touch, and then once it's going up, I would want to use my stop so that it could go up with price. So if I had entered at this point, you would take your first profit here, second profit here, third profit here, and then there was another flush here. Remember, the general structure of the market is trending down, but there was a slight retracement here. So you could trade this retracement up if you had wanted, and then so we had higher low, higher low. This was the lowest price in the lowest point in the market at this place. So this was the leg that broke through market structure down. If I wanted to draw Fibs, I would come here and then I would draw my Fibs up until this point. So I ran my Fibs here and there was a nice 61 bounce. It didn't quite get to my 70, but you can make your position 2. So once you enter one on your 61, although you didn't get to your 70, you still go fine because you'll have a running trade. So if you are taking your first profit here, second profit here, if you had moved your stop loss, you would have hit your stop loss and come back. And then when it came to test it again, okay, this didn't quite touch it here. It came to test it here, it didn't get to the 70, and then it came down again. There was another flush, but when it got here, it could not test it the third time. So, like I said, uh, indicators break and strategies break, or you would have taken some nice profit at this place, and this place before it eventually turned on you. Now, do a video about confluence because there is a way you can know when the trend is about to turn against you. For example, okay, I'll get to that point later. Let me just finish with this. So let me look for another pair that we can just let's do as many videos as we can on how to place trade using Fibonacci. So fundamentally, you should recognize your the current market structure, your higher highs and your lower lows, so that you know where to start your Fibs from. So market is currently trending up here. There was a higher high, higher low, higher high, higher low, higher high, higher low. So this was like the lowest point. Okay, we had like a lowest point at this place, and then market broke through. It looked as if it wanted to go up. So we can say this was uh, a breakthrough here was a breakthrough market structure. So at this point, we knew that price was coming down. So if I draw my Fibs from here, say I could run it from this place down. Okay, if I run it from this place down, it didn't quite get to my 61. So nothing was triggered. I won't be into trade. I won't lose. And then let's say I ran it down. Okay, now I expect a bounce. This is why you should be careful. This is why I don't use limit orders most of the time with my Fibonacci because it can break through. That is one thing with the market. You don't know what the market is going to do. So instead of saying, oh, it will hit my 70 and I should be in the trade by then, wait and see what the market will do. In another word, wait for a confirmation. Is the next candle going to be bearish or not? So once it touches my 70, yeah, instead of entering on 70, I could decide to place my stop order here. And then when it hits my stop order, it could come down. But it didn't hit it at this point. So there's nothing to be worried about here since it did not put me into the trade. Okay. So at this point, market did as if it wanted to go down. This was the leg that broke through market structure. This leg right here broke through market structure, and it came all the way to this place. So I could just pick this and run my Fibs to this point. Okay, so I can run my Fibs up to this point. Let me zoom in so I will get a nice touch on this place. So this was the leg that broke through market structure and it broke it up. Now it didn't quite touch it here, but like your support and resistance, I think it would be best to treat your Fib area like a zone and not like a line. Okay, this was too high. Okay, can bring it around here. Okay, so it won't be as tall as this other one since there was a bearish candle here signaling almost the end of the trend. So if you enter at your 61, wait for the 61 level to touch. You might not have entered this trade. Okay, so you wait for another period. Let's say we extend this. So we had our bounce here, but it wasn't much. If it's not up to 10 pips, it's not worth taking if we didn't give you up to 10 pips. So let's see if it came up to 10 pips from here. Yeah, this was up to 10 pips, so you could have entered this market and gone out with your profit if you wanted. So the fundamental principle is just to identify the structure of the market. When the structure of the market breaks, then you bring out your Fibonacci tool and you can use it to. Sometimes when mere looking at your screen, you would know where it is applicable. You could have back tested so that it would be on a live trading account, but probably on another example, I'll be able to demonstrate. So this was the general structure of, okay, there was like a confluence here, and then this leg broke through. Okay, so if we do our flip from this place and brought it here, we do have Fibs and we brought it here to this point. There was this leg seemed as though it wanted to trade higher than our 70 points, but it came down. So for someone like me, my stop loss is always on 50 pips or sometimes 100 pips, so I would still be safe. It's not like it's going to stop me out. Like the method I told us to draw other indicators. If you want, you can draw it without considering the shadow. So if you didn't pay attention to the shadow, you would start your drawing from this point. Okay, so you could have entered. It's almost the same thing since we are not looking for just one line. We are looking for a touch on either the 61 or the 70 or just this range, just this range. But it is better on this range. Once it is getting to this place, it is not so much of a valid trade. And inside your Fibonacci, this is one of the good things. So this was trending down. This is on a 61. I could decide to draw another fib so I would know where to get out. Okay, this is another one coming down. So almost the same thing happened here. If you take it higher and then you bring this one lower, so this is almost the same thing again, and this flush down, although there was a breakthrough market structure. Yeah, so you can try it for as many time frame as you want. You can try it for different currency pairs as you want. The principle is the same thing, or the fundamental principle is the same thing. Let's go on a higher time frame, say on a weekly time frame, and see if, because the candles are bigger here, so it's very easy to know where market is making a turn and where it is not. All right, so this is something I should point out in case you see something like this. This was the low, this was the high at this point, and then it seemed as though market broke through the structure with this leg up. Normally, market is supposed to turn back at this point, but this was caused by a news. Okay, and this week was a very very active week. I would not want to trade. In case you see something like this on a lower time frame, probably a news is moving the currency, and you're expecting your 61, 70, and 79 to hold. They might not always hold if it is caused by an impulsive move like a news. But if we go back in time, we will see that is the point actually held. Okay, but it was no longer a downtrend. Now we are having an uptrend. So for this one, I would want to bring out my, okay, yeah, I do a uptrend. So this was a, you can draw another one if you want. Say start from here and take it to here. This was a perfect 70 bounce. Okay, for the perfect 70 bounce, if you delete the old one, you see 70, and then it went up, it went up, it went up again. So after taking your profit, this year almost touched my 60, and like that. So depending on the number of pips you want to trade, depending on the type of trader that you are, someone can come and say, I just want to trade between here and here. Not something that is advisable. But if you want, draw your pips from here and you are waiting for a tour at this place. Not so advisable, not something I would take. But immediately it touched, it came down. Okay, so immediately it touched it here, it came down up until this point. So you could have taken something reasonable if that is the type of trader that you are. Let me take just two more examples. Let me see if I can get like two more pairs, and uh, I can tell us the next thing I want to tell us about trading Fibs retracement. Let's look at the daily time frame. This is NSD card, sorry, NSD CHF. So market started trending down at this point. Okay, this was a leg that broke through market structure. This was the old market structure. At this point, we knew that market was coming down. So if we wanted to draw our Fibs, we would start drawing Fibs from here. And then I will draw my Fibs down here. Okay, so I'll draw my Fibs down here. Alright, so I'm trying to get the old market structure around here. Yes, we can say that is where the market structure is. Or if you want, you can raise the bar higher to this place. But nonetheless, so at this point, if you had entered the market at your 61, say you entered half of your position at 61, you would have taken your first profit here. Okay, if you are waiting for your 70 bounce, this was still within the zone. Remember, I prefer, now this is what I do, you don't need to do it if it does not work for you. I prefer using stop and then not limit. So I would have entered my stop here at my 70, then I would have traded this flush down, and then seeing that it has broken through my previous 100%, I could extend this down. Okay, you can decide to trade the shadow if you want to trade the shadow. If you traded the shadow, you would have your quick scalp here. Or if you want to draw a new Fibs, you can start a new Fibs from here and then just draw it. So it's almost the same thing that you do with the old one. Okay, so I want to draw an inference from this place. Say I take my Fibs up to this level. Alright. So this was my 60 area. This was a nice pull from my 60 area. Yes, this was a pull from my 60 area. So if it had touched this, it didn't quite touch my 70, but it did touch my 60, and I could have joined the market. And if I had joined the market, I would have taken the flush from this place all the way down. Remember, first take your first profit, take your second profit, take your third profit, and just leave a runner and let the market do its thing. You can move your stop loss or trade your stop loss, whichever way you want to do it. So if I had done that, that would have worked for me. Now, this was the old market structure, and at this point, it seemed market started trending up. Okay, so you could bring out your Fibs at this level and draw a quick one to this place. If we look carefully, this is my 70 points. Nice touches on my 70 point, and I could have traded this and traded it down. So that is how easy it is to draw Fibs. You can draw Fibs inside Fibs. You can say there's a small one here. Not something I would recommend because it looks as though you are tasking and trying to make too many things fit into one place. This is for a uptrend, okay, but you can bring out the downtrend inside an uptrend too. You can say something like this. So when it got to this range, market trended down and it trended up. But I would advise that you just run your Fibs as it works. Uh, you should run with the trend. You should coincide with the trend. So a final example of how to draw fibs from your candlesticks. In the next video, I'll be showing us how to draw fibs from the zone, not with the candlestick this time around. How to draw fibs from your zone. So let's use. I don't trade the 1 minute time frame, but let's see if it can work. I have never traded the 1 minute time frame. I've never traded anything below the 15 minutes time frame actually. But let's put our principle to test since the principle is that it can work on any time frame. Let's see if it can indeed work on any time frame that we want it to work on. So this was market structure around here. Okay, so until it broke through this point, this was uptrend, 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 uptrend. Market was a little bit choppy, but if you want, we can draw our fibs from this place as this leg uh just broke through everything else that we had here. So if I bring my fibs out here. If you want to draw it from this place, no problem. If you want to draw it from what's it called, the wick or the shadow, no problem. Depends on the type of trader that you are. So if you are drawn this from the okay, so from here, or if you are drawn it from the shadow, so still within that 70, 79 range, or you could bring it down here and just draw it. So you would see follow the market. Okay, so I drew it to this point, and then there was one bounce here. It came down all the way. It even broke through this, and then it came inside again. There was another one on my 61. It came down, and there was another one. I could have joined this one here, not up here. I would wait for it to flush to know what the market wants to do. So I could have joined the market here if I wanted to. Now it came down. I could extend my fibs onto this region. Okay. So if I had extended it up onto this region, it came to my 61 here. I could have entered half of my position. Let me make this clearer so you see. I could have entered half of my position here, and then it came to my 70. I could have entered another position if I wanted, and I could have traded it, could have taken my profit, could have entered the market again. A lot of could have, would have, and should have. So I could have done this again, entered the market. So market came all the way down to this place. Say it came down to this place. Okay, so market came down here. Let me extend this very well. So this was near my 61 range. It didn't quite touch it, but if you enter the market here, you would have taken some reasonable profit on all of this. So there were lots of touches. It was like a progression. If you didn't get it on time, you could extend it here, extend it here, extend it here, and all like that. Now this was a general downtrend. Some people could be, what if I want to trade against the market? So I want to just take small profits. If I drawn this here, okay, so this was on the 79, so this is still that range. You could have taken this one up. Okay, if you had extended this because it went all the way up, okay, it was still within this 79. You could have traded this until it became invalidated. So I said that was the final one, but we could use this one as a final example. So this was the general market structure. Okay, we can say this was the leg that broke through market structure, because at this point it just went up and didn't really come down again. So if we run our fibs from this point up until this point, okay, so it actually broke through, broke all the way through, unless you started from here. So it was only a stop that would help us, but this market is, it's not something I would trade like that. Or you could run one down. Okay, we could run one down from here. So there was a bounce on our 61. There was another bounce on our 61. So imagine taking like 20 pips down. You leave it. There was another one that you could have taken. Okay, take your first profit. There was another one that you could have taken. Is about 20 pips down. If we extend it, wow, look at that. So we have 1, 2, 3, 4, then let's say 5. So imagine taking 20 pips 5 times from the same. that you just drew. So at this point, it became invalidated, and this was not necessary again because you already broke through the extreme support and resistance. So that is how you draw your fibs from the candle. In the next video, I'll be showing us how to draw fibs from the zone.